Welcome back to Rockstock Channel. It is Tuesday, May 7th at 9 a.m. and very privileged to have for the first time Ben Kallo, a senior analyst at RW Baird, a significant privately owned investment bank and asset management company based in Milwaukee in the U.S. But Ben and I have connected. He's one of the leading analysts covering Tesla, and he'll talk a bit about his coverage universe. But he also, almost uniquely among those covering Tesla, covers Albemarle and MP Materials as well. So over the years, as a number of RK Equity clients, including Piedmont Lithium and Talon Metals on nickel, have signed supply agreements, with Tesla. We reached out to a number of analysts who cared about that and have introduced Ben to some of those clients. So we've had a great, offline relationship here. What was catalyzing this interview, and thank you very much, Ben, for joining us, is that the Tesla narrative going into Q1 earlier 2 weeks ago has been quite negative, but there's been a sharp turnaround in Tesla price and sentiment since then. The stock is up 29% in just 2 weeks. The catalyst for that was, or the negative catalyst was, Reuters was speculating they were going to delay on, the low cost vehicle, and he was only focused on robots and the like. But he reaffirmed, I believe, the stock rose a lot, and you could, confirm this or not, that it was a reaffirmation of his commitment to produce new models, not just a new model. Although he's planning to use existing capacity and some new gen technology. But anyway, so it was a bit, the Tesla community is filled with lots of, narratives and bulls and bears. You're an institutionally focused sell side analyst. Very curious to hear what you're hearing from institutional, hedge funds and mutual funds and the like, and what you're saying. But you are a Tesla bull. You are an Albemarle bull. We're excited to, have this conversation. So before we introduce, or want to get your backstory and a bit, your universe, and we'll get into questioning, just want to remind all of our viewers, if you like this video, please like and subscribe. I think a number of new viewers might be tuning in to this one, viewers who care about Tesla, because Ben, you've been interviewed on CNBC, but in the Tesla YouTube, universe, you don't typically see, an analyst of your caliber. So we do hope that, a lot of the Tesla universe of people kind of come and listen to this interview. So feel free to like and subscribe to Rockstock Channel. And if you want to follow Rodney and me on X, which Elon Musk owns, we could talk a little bit about how that's impacting Tesla and the like. But Rodney is at Rodney Hooper 13, and I'm at Lithium Ion Bull. Ben, I don't believe you or Baird are very active on X, but we do get your research from time to time. And if any viewers here are interested in hearing more, maybe from time to time we can facilitate, getting some of Ben's thoughts to you. So with that, Ben, thank you. You're based in New York, but I learned you were born in California and grew up in Alabama. So give us a bit about your backstory and about Baird and your coverage universe, and then we'll get into the questions.
Sure. And thank you. I'm honored to be here, Howard, Rodney. I've started listening to the podcast. You guys are a wealth of knowledge in lithium, and it's important. And I think, from redefined sources like you guys, and there aren't very many or any as good as you guys. So just background on me, sell side analyst, just meaning that I speak with institutional clients, cover 25 stocks. I started in 2007 covering what we called then clean tech and industrial growth. It was really a nascent sector where we had to kind of map it out ourselves. So we cover everything from old battery companies like E104 and the related space, what we'll talk about. The solar companies were just coming public. There weren't really any public EV companies of scale. uh, waste to energy to water technologies. That was at a boutique firm in San Francisco called Pacific Growth Equities. Our team joined Baird 15 years ago last Wednesday. And over the time, I've kind of kept that same broad view of coverage versus many of my peers that really focus on just one silo, like materials or or auto manufacturers or auto part suppliers or utilities and renewables. And so the way we call our list sustainable energy and mobility, and really broke it up into three different subsectors. The upstream, so you mentioned Albemarle, we've covered Albemarle. Actually, before they even bought the Rockwood assets, so I got lucky with how that fit in. I was really covering it for the catalyst business. And then MP Materials, I covered the predecessor, Molycorp, the previous owner of it as well, years ago. And then on renewables, you think mostly solar, but fuel cells, grid technologies, integrators, people that finance or install the technologies, and one company, Fluence, which I think is relevant to lithium, is one of the biggest competitors to Tesla's energy business. And then on mobility, we cover Rivian, Lucid, which reported last night, Tesla, QuantumScape on the next generation battery side. But Tesla, really takes up probably 95% of my time. And I've covered it since 2011, 12, just soon after we went public. I live in New York now. I lived in the Bay Area up until 7 years ago. I had the opportunity, to go to Fremont, almost on a monthly basis, and get to see the evolution of the factory there, and then have had the opportunity to visit the Reno Gigafactory multiple times, Austin multiple times so far, and so I've gotten to see the growth of Tesla, and it's important, I think, being able to cover something like Albemarle in lithium, as well as the end markets, whether it's stationary storage or EVs, to be able to link those together. But it is different than the way most of my competitors do it.
Excellent. So that's very helpful, both from the EV and ESS side and the broader kind of sustainability and clean energy sector, because there's a lot of cross currents from it. You only cover U.S. stocks. There's a lot of stocks in lithium that are Australia based, and the dynamics and what influence, the trading of those and funds flows differ, right? In Australia, it's mining funds, it's Australia funds. But what impacts Albemarle sometimes are, if the thematic of, Fluence and Lucid and Rivian are not good, Albemarle can get smacked because they're in indexes driven by that thematic. So, so we focus on lithium, and other battery materials, but mainly lithium. Lithium, very much our focus for all these years has been a philosophy: kind of go long what Tesla is short, go long what China is short. And 4 years ago, we had Tesla Battery Day, like this time, the lead up to that, the hype, it was originally supposed to be in May, and then it got postponed to September. We were in the midst of COVID, and now, August 8th, he's having, I don't know what it's called, Robo-Taxi Day, or he's going to unveil
Robo-Taxi unveil, let's call it, yeah.
Robo-Taxi unveil. Okay. But he also committed in the recent call, Tesla stock was, has risen 29% because of this commitment, I think, to the lower cost model, expanding the total addressable market. And, so I'm hopeful, I'm thinking that we might have a similar kind of hype cycle, May, June, July, August, in the same way that we had 4 years ago. In between those two, he did have an AI day where he introduced, the Optimus bot, and he also had a Tesla investor day. Neither of those had the same, from a market perception, point of view. But if I go back and think about what Rodney was writing about, what we were talking about around Battery Day, Elon was talking about, we need terafactories, not just gigafactories. And the 4680 was going to, revolutionize and massive demand. And, in the most recent call, he was saying, oh, the 4680 is really, we should consider it a hedge, right? Because we now have cheap batteries from all the other suppliers. And, 4 years ago, all those other suppliers were also selling to GM and Ford, and they were bidding up the price. So he's definitely backtracked a lot on those aspirations. His 50% growth every year. He now says we're in between two growth waves. So we've learned to take what Elon Musk says with a grain of salt, in particular, as well, just as a joke. Battery Day, he talked about, salt in lithium clay, and, nothing really materialized there. But you said you visited Austin. I don't know if you've ever visited the Corpus Christi hydroxide plant. He didn't say anything about that in the quarterly call, but one of our clients, Piedmont Lithium, and through Sayona, has disclosed that a first shipment actually went from Quebec to Tesla. So any comments on that, would be interesting. But so here's the arc. Let's start with the quarterly call, and what are your takeaways, from a demand side? What's happened with Tesla stock? What are investors saying? And what are you telling investors? But, in this lead up to August and, faster growth and vehicle sales, right? Like, what are the key demand drivers for lithium? Certainly cars are a major one, but that's mainly what we care about.
Sure. Just backing up ahead of the quarter, and we were cautious into the quarter. Numbers were too high on deliveries significantly and started coming down, and Tesla missed. And there was a variety of one-time things. The fire in Berlin, there was arson. You had them ramping up the new Model 3 refresh. Took longer in Fremont. Just two of the, those are just two of the things. Plus, a weakening demand environment, really, I think, in all regions. But what you had on top of that was, for good or bad, Tesla gets all the publicity. People are arguing about advertising or not, but you don't see, there's dozens of articles a day. There was a Reuters article that basically claimed that Tesla was not going to do the next generation vehicle and go straight to a Robo-Taxi, a full self-driving vehicle. And this created a lot of confusion in the marketplace. Same time, you have Tesla doing its first round of recent layoffs, including some senior executives, senior engineers, the head of powertrain getting pushed out. And so and even though Elon Musk came out and said, well, that Reuters article is not true, you had so much confusion. And so the stock sold off after bad delivery numbers, after some of these executives left into the quarter. When they reported the quarter, they don't typically do this. They don't announce new products or talk about new products on a conference call. This was probably one of the most, I think, organized, kind of toned down conversations or quarterly calls that I've heard Musk have over 12 years. And he said, look, we're going to continue on. And I think what was important, Howard, you mentioned vehicles, because if we go back to the analyst day, what they committed to, or he said, was that we'll have at least 2 vehicles to start on the next generation platform. Some people call it Gen 2, they call it next generation platform, and committed to doing that. Now, where things changed is in the beginning when they announced this, there were going to be basically 3 different buckets how they were going to save cost. One was on the powertrain, where they talked about a more efficient drivetrain using less rare earths. That is still the plan there. Smaller car was the second bucket. And and less stuff in the interior, that's still going to be there for this next generation vehicle. The third thing was they were going to revamp the manufacturing process. And just in a simple way, I don't know if the story is true or not. This is what I've heard. Musk said to some of his engineers, why don't we make a car like a Matchbox car, right? It's all one piece at the bottom, and that's how we want to do it. And so they scrapped that. It would take, new factories, they have the factory in Mexico that they were planning on doing. They have expansion capacity at Berlin and Austin, plenty of room. And in this environment, they made the decision to kind of Gen 2.5 is somewhat what some people are calling. So not as much cost savings as they had originally anticipated until they ramp up to this 3 million of capacity that they have out there right now, utilizing a little bit more of capital that they buy, but utilizing a lot of what they're already doing right now. And so if we think about this year, last year they did 1.8 million cars. I think that, consensus, the street, our numbers are just a couple percent north of that, kind of a flat year. It really is next year. And they also pulled forward the time frame because it was going to be in the second half of next year that it was going to be introduced. Musk said that it could even be introduced this year and start production. Now, as everyone knows out there, timelines are kind of squishy with Musk, to say the least. But over time, it's not great that he doesn't give exact timelines, but he's done a lot, progress if we give credit for that, of getting where they are right now.
Okay. So, thank you for reminding us of the layoffs and the other challenges in the lead up to the quarter. And yes, also reminding us that he did bring forward, not only there's a commitment, and people are just parsing, like, he said Reuters is lying, right? He may or may not be committed to the next Gen 2, but, if this 2.5, he's utilizing underutilized capacity. You're saying he's at a 1.8 million run rate. There's capacity of 3 million cars. Again, from a demand from lithium perspective, we'd like to see him aggressively ramping up, the number of cars that's going to feed demand for batteries, demand for cathode, demand for lithium. So it looks like that's where the trajectory is going, and we're going to hear a lot more on August 8th.
We're unclear about that August 8th because he calls it Robo-Taxi Day. But I would suspect that that's a good time when everyone comes together there, that they also show the new vehicles. There is kind of this, seesaw. Do we show the vehicle early and maybe we, cannibalize some demand? From what I've learned over the years is people buy cars predominantly when they need one. So there are, people don't wait to get like the newest vehicle. In some circumstances, yes. But yeah, I think that they're trying to juggle introducing a new car to the market, and while they're still trying to, pull levers of demand for the Model Y, which is, the best-selling car, and the new Model 3, refreshed Model 3.
Okay. One of your peers, Tony Saganaki at Bernstein, asked about the question about the new models, and he said nothing. But he did say, wait, he doesn't want to disclose anything until August 8th. So that's why I'm speculating it won't just be Robo-Taxi. There hopefully will be some news about the new models then.
Ben, in terms of regulation and requirements around something like a Robo-Taxi, where are they at in terms of having a fully self-driving car? How realistic is the sort of launch and approvals and, a flawless, seamless launch to this?
So I think obviously not there yet in different jurisdictions. One of the struggles is going to be kind of checkerboard. Both, in the U.S. as well as, globally, as you can imagine. Musk, took a quick visit to China. All the news said that, he had approval for full self-driving. There was, still rumor, speculation. I think, the stock moved positively on that. I think just showing that, there, that he has the ability to open up into new markets. I think that it's a very good question. It's what, investors are starting to turn to right now in the Twitter world, and, some individual stock owners of Tesla, full self-driving, autonomy, and even institutional investors. A big thing drives the stock, a big part of future value. I think that the way that they're introducing new iterations constantly right now shows, it points to that they're doing it in a way that actually could be is probably better than all their competitors. So there's a big debate about this: cameras versus a LiDAR, but I think that they'll get there faster than we think with machine learning. Then it really becomes, and this is the question you asked, and this is the question that investors ask, is what happens from a regulatory standpoint? Because, if I can go, touchless and drive and just ride my car, it's one thing. Now, to be able to do that legally is a complete other thing. And I think most importantly is, when do they accept liability for it, right? Because now it's, there's disclosures. You have to have your hand on the wheel, and you still have people suing them, when they're in accidents. And so that's going to be a big thing, I think, to watch out for, is when they actually take liability of their full self-driving. And I think that, we're still a couple of years away. The way that Musk described it on the call, said it in the past, was, at some point, the data is going to be so compelling that, regulators are going to have to move in their direction when they see how many, how fewer number of accidents, fewer number of casualties there are, and so that they'll move in their direction. But I would say that they're still a ways away. And one of the things that, Elon's criticized for is, sometimes being brash, sometimes, and maybe not having the relationship with regulators that non-brash CEOs and people do. But I think that we're still a couple years away from the regulatory side. I do think that we could see that full self-driving actually kind of do this coast to coast thing without interruptions. I would say, I don't want to sound like Musk, but within a year from now, and it really has changed where they were compute power. I think it was a bottleneck, and now the compute power is not. They have all this data from out there. As it pertains to lithium, I would say one question is, does that cause, if we go 10 years, does that cause people to buy fewer cars, or more? I mean, it's a good problem to have, and I think there'll be more electrification, and it'll be bullish for lithium. But there is also, like, does the annual sales of cars shrink because I can just loan my car out or what have you?
And that's, I guess, something it's interesting for me here on this interplay. So on the original battery day, the expectation, as Howard mentioned, 50% compound, 20 million vehicles, 2030. What we're seeing, and I'm sure you guys are crunching the numbers on, is the exports of cars, particularly EVs out of China, is going through the roof. And it looks like they're starting to sew up a lot of the rest of world markets with very low priced cars. One way, for Tesla to get back into that race versus some of the OEMs, which I think are probably going to struggle, is something like the Robo-Taxi, but not all developing markets are suited. If you've been on holiday, if you've been to anywhere where I live in the world, there's no way you could ever model or predict, how that goes down. But Do you think that the Robo-Taxi can be, I guess, reasonably priced and, get Tesla back in the game when it now competes with what is, China going full bore into rest of world markets with their exports?
A couple things there. I think that, in the U.S., coming up on an election, it seems like that's, both candidates, want to be less dependent on China, louder and louder, less dependent on China. Our tax credit here, part of the Inflation Reduction Act, there's new guidelines about critical minerals, and after 26, after 26, you can't really have any parts from China. I think that one of the things that former President Bush has campaigned on is that EVs are all coming from China, and that's EVs are terrible because it's ruining the U.S. auto industry. I think that there's going to be a lot of jostling to keep Chinese OEMs out of the U.S. And so far that's that's occurred. I think that Europe as well as I think there's more penetration there. But I think that more than the Robo-Taxi, I think this next generation vehicle puts them kind of back in I should say back, because they're still one of the leading producers, but it helps with that competition from the Chinese OEMs. And if you look at all like the last 5 conference calls or more, Musk has been pretty upfront about competition. Competition was always the bear case, competition from what Ford can do this, GM can do this, but it's really come from China, and he's been very vocal about that. And I think that and respectful about that. I think the view is that kind of rising tide lifts all boats, and what we've seen is the negative headlines around EVs in the U.S. Some of the OEMs pulling back and going to plug-in hybrids actually is hurting Tesla, because if you think about a couple of years ago, there's 10 commercials on the Super Bowl about EVs and charging, and Tesla didn't have one. But when people went and searched electric vehicles, they went and saw Tesla, and that helped spike their sales. They talked about that in the past too. And so I think that a competitive ecosystem is actually good for Tesla in the long run. Now they have to keep innovating, and I think that we'll see more of that in August.
And just as a broader question, so originally there was talk about processing clay. That's fallen away. They've got Corpus Christi. I'm not hearing a lot coming out of that. And the 4680, if I remember correctly, the target was an annualized rate of 200 gigawatt hours by the end of 2022. We're not even, I don't think, 20. So at the moment, the relative supply of batteries, cathode and lithium, is making cheap batteries available. But as you know, we always go through cycles. How much of an exposure, how much of a risk will it be if we revert back to another lithium bull market where prices, spike up and battery cells and so on go up, and Tesla has gone back to effectively being reliant to external parties?
So a couple of good questions there, and I want to start too, because with the 4680, because Howard touched on it as well, and I think that the tone or the message definitely changed on the conference call. It was like, oh, we're doing this because there weren't enough cells, and before they were talking structural battery packs. You need the 4680 for that for the Model Y. They did away with that as they struggled to ramp up the 4680. I think that, going back to Panasonic, and Panasonic's been at it for a long time, but when they went to the Gigafactory, I remember it took, I don't know, a year and a half for them, to ramp up production. and they weren't really doing as much innovation as as going into 4680 that Tesla's doing. Some of it they bought from Maxwell Technologies, but I think now they've kind of retrenched to just stay focused on the next generation vehicle. It's not clear, from what I understand from speaking to them and others, is that the next generation vehicle will use multiple different cells types, as well as chemistries. Where in the past I thought that they were going, completely, and I think that's what the message was, completely 4680. I don't think that they've just banned it, the 4680. I think they just slowed it down right now, and primarily using it for the Cybertruck, but still building there in Sparks or Reno for the semi and for the next generation vehicle. But I think what they've seen is, oversupply of cells when there was kind of, boom, 2021, all these companies coming public via SPAC, and there was signing deals, and now no one's using these cells, and so they're taking advantage of that. I think as far as the lithium refinery goes, I think it's tougher than they thought. I think that making cells is tougher than they thought as well. And so it's taken a little bit longer. It's taken longer for them to ramp that up. And I think that, there's learnings from that. I think there's ability for them to expand that. I think it will become more important. And I think, you guys are vocal about this, how the importance of having U.S. or North America sources of lithium and refining too. And so I think that becomes more valuable, over time, especially with some of these, Inflation Reduction Act requirements.
And then if I can just touch on Albemarle. So I saw your rating. Howard's always had a belief in terms of a premium rating. You talk about diversification of the asset base and the sources. What I've always believed is pro the case of a premium rating for Albemarle is the fact that they have quite a strict criteria of normally 2 times WACC in terms of what they expect as a return. And they were dominant in the old market. But what we've seen in the past couple of years, Europe almost outsold China in EVs. I think it was in 2021 when the first carbon emission penalty came in. Now they are a fraction, they're a rounding error of that, although next year you have another leg up. So China's role and dominance in EV sales and the ESS has increased in the last while. And they've also observed, the IRA and the EU bringing in new regulations and requirements. So they have taken a sort of tighter grip on controlling on the cathode and the battery side. And now they are, mining lepidolite and also going heavily into Africa. So is there a risk, or how do you view the risk of China domestic lithium production and China production from African sources or feedstock for someone like Albemarle? Do you feel when the EV penetration in the US gets increases or elsewhere where people require IRA compliant material, etc., they'll have a sort of leg up or higher standing that they justify the premium rating? Or is there a risk if China continues to hugely export vehicles and sell domestically that, Albemarle is more exposed to spot and, and I guess volatility in its pricing?
A couple of things I want to go back to a question that you asked last time that I didn't answer was just the risk about, I think what the question was is the risk around, cutting supply, right? What Howard started off talking about, this has really been driven by supply reductions or CapEx reductions in lithium. And then do we hit where, if you look at Stellantis, if you look at other OEMs that report earnings, there's been a little bit of pullback and maybe a lot of pullback in some OEMs, but some are still full force. And so do we get to a period where we've underinvested and then you start having, cell manufacturers, cathode manufacturers, OEMs coming online, and there's kind of a hurry up. We didn't invest enough, and that creates, an increase in lithium prices. And I think that we've seen that before. I think you go back to Albemarle, they scrapped CapEx plans once before, when the market was bad, and then kind of pivoted very quickly and said, no, we're going to keep on building, when prices got better. I think that, Albemarle, risk is, and I think, Howard, you talked about Clay and Battery Day. I left Battery Day thinking, and the stocks, lithium stocks all gapped down because Elon Musk, made it seem like we're all going to drown in lithium. I think it's, and you guys know much better than me, I think it's harder to do. I think that the market has become less, outside of the U.S., less, the buyers have become less worried about who's selling it to them. It's become more of a commodity in that sense. Whereas Tesla, early days, just wanted to buy from big people or their suppliers did, because they didn't want supply to be disrupted because of lithium when they had so many other things going on. So I do think that that's a risk for Albemarle. I think that the good thing, have been integrated with conversion as well, and across carbon and hydroxide is important as well for them. I think it's how one of the things in covering solar that was very difficult for the industry of components is supply chain in China that is not always rational, to say the least, or they'll sell at losses. And so, if that's happening, I think that's happening in rare earths. If that's happening in lithium, that makes it that much more complicated until, and we've seen some deals, right? GM, where, they're willing to pay a premium, for domestic sources of lithium. I would also say that, recycling eventually, I think people are still trying to figure out where that, we're so early in it, but where that fits into supply and demand. And if someone like Albemarle can help and make money off of that, recycling is still to be determined.
Then the one thing that I do see as a bright spot for Tesla and for lithium in general is energy storage. Your thoughts on, certainly in China, they are now producing bigger and bigger form factor. There's 500 amp hours at plus is being tested. So there's now a specific energy storage cells that could compete in the 4 to 8 hour market instead of the 0 to 4 hours. Your thoughts on, if prices of materials stay relatively subdued and you get more improvements and so on at, the Tesla plant, and they're going to open Shanghai in theory sometime this year. How big, with the growth in renewables, how big do you see that market potentially becoming on an economic standalone basis? It looks to be competitive versus other short-term backup.
Yeah, it's something that we're very bullish on for a variety of reasons. One, technology improvements, cost reductions. I think that grid strain from electricity demand to run servers, AI, I think exasperates that. Decades long of underinvestment in transmission. Not just in the U.S., but also parts of Europe and elsewhere. For example, I remember it must have been 5 years ago. Elon, did Elon thing on a conference call and said, we're going to sell, 2 gigawatts of hours of mega packs next year, and we're going to sell 4 the following year. Then we're going to sell 10, and I kind of chuckled. Now, the next year, I don't think they sold 2 gigawatt hours, but this year, we have them at just over 17 gigawatt hours, and then moving to 19 gigawatt hours, and then to 20 gigawatt hours, and that's storage, both from the mega pack as well as the power wall. Vast majority of that are big projects, and coupled with renewables, which replacing fossil fuel plants, alone on the grid for regulation of the grid, frequency regulation, demand response opportunities. So doing power arbitrage, helping out the transmission, all opportunities. In the U.S., it's really kind of an oligopoly. But a big business for Tesla there in the overall market. A risk I see, is there are early stage companies doing long duration storage, or smaller companies that can and there are pockets of regions that are demanding this long duration storage, which doesn't use lithium typically. And so, but that's years away. I think that this is a boom that I think a lot of investors focused on lithium think mostly about cars, but I think this has become a bigger discussion in lithium.
And Ben, do you think, given Tesla's position, they can still earn solid margins, possibly better in the energy storage than in EV? So definitely an area that you grow out to its full capacity.
Yes, I think that right now they're hovering just quarter to quarter, just under or about at 25% gross margins, better than the auto business, and good line of sight, because a lot of these are big projects. Grid interconnection is one thing for renewables that people are worried about. Just being able to connect to the grid, have equipment to connect to the grid. But there's so much going on. It's really utility scale solar and utility scale storage, I think, are the two brightest parts in the energy business right now. And so I think they have good line of sight for several years here. And one big thing is also the Inflation Reduction Act. So they have a standalone storage credit of 30%. So that's allowed some projects to get penciled in that would normally not be. And so becoming a bigger part of policy as well.
So do you think energy storage can be in margins what EVs were to Tesla a few years back?
Yes, I mean they already are. They have better. They don't break out the operating margins, but I would assume it has a lot less operating expenses surrounding that business.
How much of there's some speculation that the Musk was on his best behavior in the quarterly call and other reasons because his 2018 compensation package needs to be approved. What are your thoughts on that?
So we do a thing that we have an outperform rating on Tesla. I'm often labeled a perma bull by my competitors out there. I have had different ratings over the years, but I think long term, just maybe a simple thing is the ability to hire and retain some of the best engineers. You look at these studies in Tesla and SpaceX, but technology throughout the company. I think we have this thing, so we have an outperform rating. We have a thing called a fresh pick. You can be bearish and still have an outperform. At the beginning of, at the end of January, we put a bearish pick on it. And part of my thesis was this pay package, because, Musk has said, basically, I'm going to go take my AI elsewhere if I don't get my shares or my voting right. I think that it's still a risk where, we've taken that off as the stock pulled back. I think it's still a risk. You're starting to see, more and more individual shareholders come out and say, no, we don't want to support this. And there's an argument going on. My personal view is that, that the compensation plan, went through, a process. Some people criticize the process it went through. It was voted on. He hit these, and there was one before too. When it first came out and analysts and investors saw it, the targets, no one believed like he could do it, and then they did it. And so I think that he should get paid for that. But it's going to, there is a lot of pushback right now. And if I was looking for that much money, I'd be on my best behavior too.
When will we know?
Yeah, it's at the annual stockholder meeting, which is coming up in June.
In June. So in June, this question will be answered, and to the extent it's an overhang, how do you think it goes? Like, what's your read from the institutional investors that you speak with?
Look, I think that there were periods where Musk, it was even more difficult, kind of when the Model 3 was ramping and they were struggling with it, and, kind of, the SEC 420 secured all of that. And it was a very trying time for investors. And, some of these institutional investors are invested across, many of his different businesses, SpaceX privately and things like Neuralink. And, I think that for the most part, many of them stuck with him. I think that the worry is like, is he hurting demand by, political views? I think that probably happens on the edges. I think that, people are smart, and, they go out and research a car, and, and they buy the best one. Not everyone, but, and so I think this is, it's coming to a head, but I think ultimately, these institutional investors have made a lot of money with Elon Musk. And so I think, ultimately will be supportive, even though you have kind of one-offs, for the way I characterize it, kind of one-offs, that, are pushing back on it.
I mean, the big institutions, if they own the shares and they vote against it, and then, they're going to crush their own share, right? Like,
yeah, it's kind of a catch-22.
Yeah.
And, we talk about key person risk, key man risk, key woman risk, whatever we want to call it. And just in general, but this is the biggest case of it, right? And I don't think, personally, I don't think the stock goes up if Elon Musk just disappeared.
Well, if they vote against it, he's clearly his attention, and it's totally unfair, to retroactively, the court to, it was voted, and no one believed that those targets were going to be met. Okay. Elon basically said, if you don't believe that we solve AI, Robo-Taxi or full self-driving, then you shouldn't own the stock, right? Like, how do you break down your valuation? If you view it just as a car company, and a lot of analysts say they want to see the growth. I mean, the PE has gone down because the growth has gone down, and there's been lots of price cuts, which he blamed on high interest rates. But, again, there's more to it than that. So how much of your valuation, how do you break down your valuation of like Tesla from an EV perspective, an ESS perspective, and then, AI? Again, Adam Jonas, I think, puts a huge amount of the valuation in the future, the Robo-Taxi, FSD.
Howard, I'm a meat and potatoes type person, and so I just don't know how to do it yet. So like we include full self-driving attach rates into our revenue. I don't have any Robo-Taxi. I do, I base it off a future EBITDA number discounted back. I put a tech type multiple on it. Often I get asked, when I do media stuff. Is it a car company, or is it AI company, or is it an energy company? And I just start saying yes, yes, it is. Because it is. I think that the full self driving, I think, is a big part of valuation currently, and I guess the way that we put it into our valuation is is by the multiple. And so, for example, like we comp it to high growth tech companies, and some people will say, well, why do that? But basically, there's everything from Amazon, Netflix, to Twilio, to Pinterest. But we put 30 times multiple on EBITDA. We discounted back on our 2026, and we discount back 9% to get to 275. I think a lot of people, that we talk to, investors kind of look out and say, the $20 EPS number in 5-6 years, and then get their target that way. I think as Dojo becomes a revenue source outside of just powering their full self-driving, I think then it will get more of an AI multiple. And I don't think, and people will disagree with me, I don't think that Tesla is getting some massive premium for AI. With everything that they have going on, just in like energy and the auto business itself, and some FSD, but not the amount of capex they're spending on compute power, not on what they're doing with Optimus. One interesting thing, and it's a kind of above my brain power, but they talked about on the call, is basically multiple million, several million cars out in the road with a computer in it. And they talk about this distributed compute power. And so when you're not using your car, they could use your car as a compute power. And there aren't too many examples that I can think of distributed compute. If SETI, the Search for Extraterrestrial Intelligence, there used to be you could run your computer in the background to help run their programs to go search for aliens. There's also the search for the highest prime number that does the same thing. There's a program you can put in the back of your computer. Now this is something that Tesla can use as compute power and then compensate either through revenue share or some other spoof. Now this is a couple years away, but it just I think reinforces what the misconception that Tesla's operating with a broken pencil and a protractor over there. I mean, they have some very smart engineers. They're spending a lot of money in capex and R&D, and they continue to lead. Well, you have other companies that are just trying to produce cars right now. A lot of their competitors, especially the smaller, pure EV companies here.
You mentioned you cover Rivian. There was some talk of Apple talking to Rivian today. Do you have any thoughts on that specifically, but just overall, how is Rivian doing? Because the OEMs like GM and Ford are backtracking, and there's lots of mixed messages. I think as Mary Barrow is on Bloomberg saying, no, we're still committed, but I think they go with the political wins, and they don't know if Trump or Biden's going to win. So what's going to happen? But Rivian obviously is very focused, and a lot of people think the old the existing incumbents, they may go out of business at some point, but they're very profitable. So just like, how is Rivian doing? What do you think, is going on with Apple? Because they abandoned their car pursuit.
After a lot of money. So, we like Rivian. It's still early days. I think one of the things that, they have going for them that Tesla did a good job of is establishing a brand, and, they have their own, they have their own brand identity, whether it's, people that want to be outdoors or people that want to look like they want to be outdoors, and I think that, the loyalists will help sell the vehicles. I think that, their pivot to utilize the factory at this time, because they do have, they are burning cash. They do have partners, and they can raise money out there. I think they're trying to be thoughtful of it. But I think that this year's going to be tough. As they retool their factory. Until they get to the R2, I think the R2 is going to be a compelling vehicle. It will help overall EV sales, for the whole market, help Lithium in that case. With Apple, I don't know. We hear more from them tonight. I think that, I could say, does Apple want to partner with a company that, Bezos is very invested in, and Amazon? I don't know. Apple has a lot of capital that they sunk into their EV program. So, maybe this makes sense. Apple is, also at battle with Tesla. Elon likes to take shots at Apple, but they're trying to hire engineers, and it's very competitive. And so, it makes sense in some ways. We'll hear more, I think, when they report tonight on that.
Okay. You said former President Bush earlier. I think you meant Trump.
Yeah, I did.
Elon and Twitter, he sold his Tesla stock, just I know people on the Upper West Side here in New York who are big environmentalists who just won't buy a Tesla, right? They don't like his politics. So you say it's on the margins, I'm sure to some degree it is, but he refuses to advertise. I don't know. It's really hard. It's a coin flip, but like my tea leaf reading is that like there's a real possibility that more than 50% probability that Trump wins. And is that good or bad? Like they seem to be somewhat bedfellows politically on the border and other things. Obviously, yes, they don't want China, or Trump and Biden are collectively, want to protect the industry, and Trump and all the Republicans are seen. The rhetoric is anti-EV, but, Elon's, it's manufacturing, and do we want to lose to China, in the EVs, right? I would think that Trump or his sensibilities might, or maybe Elon could persuade him. I don't know. Like, what do you think happens?
Too early for me to try to pick the election. I see, I see polls. I see, all kinds of stuff, those gambling sites in Ireland show that Biden's going to win. And, but regardless of that, one of the risks for my whole sector is day one, Trump wins. From a headline perspective, the market's going to sell. The question we get very frequently is around the Inflation Reduction Act, and will that be overturned, repealed? If Trump takes office. I don't think so, but I do think, I think that there's too much money that has rolled out into renewables, into stationary storage, into factories. For solar, for example, a company I cover is building, expanding in Ohio, building a factory in northern Alabama, building a factory in Louisiana, all reddish states. I think it's hard to fight that. One thing that I think is the biggest risk is the EV tax credits. To answer your question, about Musk and Trump, they've kind of gone back and forth. Musk was on, his business board at first and then left. And then I remember Trump was doing an interview and said that Elon Musk was a very important man and we have to guard him. And Musk, I think, held a fundraiser, not for Trump, but for non-Biden, I think is what it was called, recently. And so I think that, Musk can, can be very supportive of the industry and policy there. But day one, stocks sell just on the headline.
Right. It should first, ask questions later. But is that then a buy opportunity because the market's overreacting? Because
it does. It is. The investment tax credit for solar before the IRA was extended under Trump and the Trump administration, and so it's a jobs program, and they're aware of that.
it's not just if Trump wins. It's also, I mean, the Inflation Reduction Act was an act of Congress. He can't just wave a wand and get rid of it, right? You need a Congress, and it took a long time. And I think there's a lot of things in there that are MAGA, that are pro manufacturing in America, especially on the supply chain related stuff, like not being tied to China. So yeah, maybe he would want to get rid of an EV subsidy, but I don't think you would want to disincentivize, production of lithium, or nickel in America, right? I think you would keep those. And a lot of the factories are in red states. And, to the extent that the Department of Energy, is giving out money and he can kind of direct where that money goes. You may not have Jigger Shah there, but you'll have his guy. I mean, that's where I'm falling on this. And I think that you could have a meeting of the minds between Musk and Trump, and Musk would basically say, like, look, electric cars are the future. You don't want to lose to China, right? Make America great again is not to, fail on electric vehicles. That's my view. If he wins.
If he wins, I agree with that. I think that what we saw with some of the Treasury stuff that just came out about critical minerals is the Biden administration, and this is just my 2 cents, is them kind of ratcheting it up so that they can't get attacked on, we're supporting China. So saying, we're going to create more jobs, make more materials come from the U.S. Now, the feasibility of all that's a completely different question.
But on that, there was CATL, the IP, with Ford was a major thing. And then I think they got a reprieve on graphite. We don't need to go into the details of that. I think we're going to do another video specifically on, because it finally, the guidance was clarified last week. And it was important for them to do so after many, many delays. If they waited further without the guidance, then if Trump were to win, unraveling, it would have been easier because those definitions have not been made. So I think it's good that they did that. But that's a arcane topic that I think we'll do another video on. But I found it interesting. Secretary of State, I think Blinken, was in China and kind of got snubbed by the Chinese, right? The data points or the headlines that I saw were, very low level people that didn't even walk them to the airport. And then the very next day, Elon Musk is like shaking hands with the president, right? And signing. So for me, that was like, it was political. Yes, it gave it another, ratchet up on FSD and in China, but Elon's main competitors are Chinese, right? And he started the price war. They started the price war. Like there's BYD, competition on who's the biggest EV seller. So how do you see just the politics of China? So it says Elon and China, and Elon in America, politically, and then like
he covers a lot of ground and he gets things done. I mean, look, I think the same day they came out with a rebate for turning in an ICE for an EV in China too. So there was a lot going on there. You know, he does business with CATL as well. I think that he was meeting with some executives at the same time there. I think it's, you know, there's a lot of controversy around Tesla, around Musk. You know, a lot of people, you know, think that he's just a, you know, a circus clown or something, and just
P.T. Barnum.
P.T. Barnum, yeah, and I think by, you know, just flying to China and get, you know, whether, you know, the reports are exactly right or not about full self-driving, he's got some pretty good clout, you know, and I think that you know, he kind of changed his plans to go to India, and he's kind of working them, and he's been able to do that in the U.S. If you go back to, you know, when they were going to build the Reno Gigafactory, they had, you know, several states and kind of jockeying for it. And at that time they wanted, you know, tax breaks and stuff, but really now they do shovel ready. But a lot of people want Tesla there. It creates jobs, and China's no different. And I think that it's good that we have, you know, a businessman that is able to do that.
The headlines today were like Tesla China sales were not so great, while other Chinese brands were much better. So how's the Tesla brand doing in China? And, you know, the fleet, you know, the sexy models, I mean, like they're tired. Like the auto industry always wants new. Like, what are your thoughts on that?
Yeah, no, I think that you know, directionally the data is good. Sometimes there's things with shipping that and timing, but no, sales have been weaker there. I think the competition has picked up, new entrants, existing entrants. It's a risk. I think, you know, this next generation vehicle will help them kind of take the pole position again. I think brand is still good, but I think that, you know, there's a higher propensity for the newest kind of technology than there is, you know, in other parts of the world there. And like you said, you know, we're coming on, you know, several years of having the Y out there without really being refreshed.
Warren Buffett, over the weekend, you know, the speculation, you know, he bought BYD, you know, but I think that was more Charlie Munger's doing than Warren's. But what do you think? You think $168 billion, some of it comes into Tesla?
I don't know. It's interesting. You know, I don't know how billionaires communicate, but, you know, in the past, you know, they used to get into it, or Elon got into it. He was going to start a candy company, just because, you know, and kind of poking fun at Buffett. And I was surprised by, you know, like Musk kind of was like offering, you know, you should become a shareholder. And look, at one of the deepest, darkest periods of Tesla history, Larry Ellison came and swooped in and bought a big fat chunk of Tesla and made much more money than, you know, whether or not he needs it or not, but he made a lot of money on it, you know, got a board seat.
They're friends. I mean, you know,
they're friends. Yeah, they're friends.
Warren and Bill Gates are friends, and Bill Gates and Elon Musk are not friends.
Not friends. Not friends at all. So yeah. So I don't know, but, you know, it's kind of, it does show you one thing. And look, I think everyday investors are very important. They're important to Baird. They're important to our economy. I think that one thing to remember about Tesla is how much retail investors trade Tesla. And I think this was a little pop that we saw, or the kind of all of the scuttlebutt around it. It's a lot of retail, you know, excitement about it, with just kind of some comments out there.
I think it's unlikely. It's just not, in a scenario, if he's on his back and there's an opportunity like Larry Ellison kind of came in, then I could see Warren Buffett coming in. But Warren Buffett's not going to come in saying, you know, if Elon Musk is saying, don't invest in Tesla unless you believe in AI, and robo-taxis, and we're going to solve FSD. That's not what Warren Buffett does. Warren Buffett,
Coca-Cola.
yeah, exactly. So I'm with you, on that, but it's always good to talk about, questions of the day. So latest Musk tweet, he says, invest in Argentina, and he seems to have some meeting of the minds with the libertarian Malay. So how much of that is the politics aspect of it, and how much do you think that might be, lithium related?
I think that Elon's become more and more political. I guess you have to when you're running a business the size of Tesla, with so many, so dynamic. Lithium's very important to him. So there's got to be something there with it too, on that front.
You don't cover Arcadium, so we won't talk about that. But we had Paul Graves on the podcast. Endless conversation, but I think we should probably, cut it here. Really appreciate, Ben, your coming, and maybe we could have you on again on August 9th,
Okay.
to discuss like what happened. But like, I really, and again, if I'll get your research from time to time, any viewers here, if you want to hear from Ben, just email me at rockstockchannel@rkequity.com, and we could have a dialogue and maybe share some thoughts from Ben. Okay, thanks very much again, Ben.
I appreciate it, Howard. Thanks for all you do.
Okay, take care.